Ever since the crash of 2008, economists and analysts have had a pretty tough time forecasting the future, but that doesn't stop them. In fact, one executive at investment bank Morgan Stanley said in 2013, we can expect to spend another year in the Twilight Zone. Well, INSEAD Professor of Economics and Deputy Dean of Faculty and Research, Ilian Mihov, has some insights and outlooks he would like to share with us, and we asked him to join us today on INSEAD Knowledge. Welcome, Ilian.
Thank you. It's a pleasure.
Does it seem to you that perhaps the world will be spending another year in the Twilight Zone in 2013?
Well, it will be a difficult year, yet another one, that's for sure. Right now, the most likely outcomes are, of course, very, how should I say, not scary, but again, a slow recovery, again going into recovery, which is not very satisfactory.
Is there anything to feel good about in the coming year? I mean, everybody is looking, this is almost optimistic what you've just said. It's kind of slowing recovery. You also read about things that say further recession.
Well, in Europe, I think that there are a lot of question marks. But in the US, I would say that if the US Congress and the President agree on the measures to avoid the fiscal cliff, then the US economy is poised for continuing the recovery. World growth will be 2.5% or 3%, 3.5%. But I would say that actually the US is in a relatively good situation at this point. Still deleveraging, still uncertainty, still the housing market is not where it should be, but moving in the right direction.
What gives you some reason to be a little more optimistic about the US?
Well, I think that if we look at the data, a lot of the data in the past few months has been relatively good for the US. The job creation, the industrial production. We had the effect, of course, of Sandy on the US economy, which is a non-trivial effect. But if we ignore this, capacity utilization rates actually in a lot of industries are up to levels that are normal or average levels for the US economy, especially for final products, for mining, and so on. The big weakness of the US economy is the construction sector, which again is coming from the housing market and all these issues that led us into the recession. I think that I'm a little bit more optimistic also because I think that the Fed is doing what they should be doing by buying these mortgage-backed securities.
With all of this, did quantitative easing work?
Quantitative easing is actually, it's a slightly complicated thing in discussing because there are different types of quantitative easing. When we go back to QE1, everything was freezing because everybody was fighting for liquidity. Everybody was afraid that their depositors will come and say, "Where's my money? Lehman Brothers failed. How safe are you? Should I take my money?"
Banks stopped trusting each other, which was sort of bad.
Nobody lends to anybody else. So you start pulling out money from the economy, keeping liquidity in the bank just in case there is a run on your bank. At that time, the Fed intervened massively by buying commercial paper, by buying different types of securities, by unplugging various credit channels. This helped the economy tremendously. In a recent speech, Ben Bernanke, I think in August, maybe in Jackson Hole, he mentioned that the entire QE1 and QE2 contributed about 3% to the GDP growth of the US. So QE1 was focused mainly on, you increase the supply of money, of course, so the balance sheet of the Fed increased from 900 billion to 2.7 trillion in the first wave, or 2.6 trillion. But the big thing was that it was really going into different directions, into different credit channels, unplugging them and making them work. QE2 was very different because in QE2, the Fed said, now let's just increase the money supply or keep money supply at the levels as before by buying treasuries, by simply substituting all these other forms of credit for just one, buying treasury securities. I'm much more convinced that QE1 was a big help for the economy. QE2 is much more difficult to evaluate. So I think that overall it worked well, but I think that we've reached the limit. At this point, the ball is in the hands of the fiscal authorities, of the government, and of companies.
Let's look a little bit at Europe. The whole debt program, the whole debt problem, austerity versus stimulus. We've been talking about that for more than a year. So would you put yourself in the austerity column or the stimulus column? Because in July you sounded though you were at a conference at INSEAD. You were very much in the austerity column.
I think that in the long run, austerity is the right approach because a lot of these things are not sustainable. You know, we would like to consume more, to have more benefits for everyone, better health care. But we have to realize that some of these things, we cannot afford as a society. So we have to sit back now and think, what are the things that we can afford and what are the things that we cannot afford? And at this point in time, there are a lot of things that I think we cannot afford.
For example, because I mean those are tough choices.
Absolutely.
Even today.
No, I think that some of the biggest examples will be the healthcare system, especially in the U.S. and in the U.S. and the pension system in a lot of European countries. Retirement, at what time do we retire? You start working after university, after college at 23, 24, and you retire at 60 in some of the European countries and maybe even earlier. But the lifespan now has increased to 90. So you work about 40 years or 42 years to pay for a life of 90 years. And that's not possible. So retirement age has to increase in many of these countries when you start getting your healthcare benefits, when you start getting your social security. And these are not popular moves because many people say, well, you know what, I was promised when I started working that I'll be able to retire at 60 and or 63 or 65. It's difficult. It's difficult to convince the public that this is not sustainable. The way forward, of course, is to say, we slowly increase retirement age, not immediately, but over the next 10, 15, 20 years, we do this until we get these things sustainable.
Let's look specifically at 2013 and just quickly, what do you see out there globally? And then where are the hot spots, where are the good points?
I think that if you look at Asia, starting with Asia, given that I'm located there, things still look well. I mean, it's true that China is slowing down, but they slowed down to a large extent was expected. I do not think that it is entirely cyclical. It is due to the fact that as China converges closer to the frontier, closer to the rich countries, every additional replication that they do is more difficult than the previous one. The growth rate cannot be at 10, 11% as before. In Europe, again, the conference that you mentioned in July, I think that in Europe, the issue is companies are actually good, they're competitive. We had this conversation about competitiveness of European companies at that conference. And when you look a little bit closer, you realize that Europe has smart people, they have good companies, innovative, very productive companies. And the sad thing is that the foundations are right. These multinational corporations, these national champions, even small, medium enterprises, they're quite competitive. But then on the top you have government policies that have created this situation, which is difficult to get out of at this point.
They're stifled a little bit by government policies then.
In some sense, yes. And it's sad because I think that Europe is certainly a great place and can be and will be, I'm sure, and still is one of the leading places in the world. But at the same time, I think that we're not growing at the speed at which we can grow. And that's the sad thing, and I think that has to be overcome.
What about Latin America?
They had a difficult year last year. This year, I think that Brazil, Argentina are doing a little bit better. Mexico is doing very well. So Mexico is obviously the new star out there that everybody talks about. And exports from Mexico are increasing at very fast pace. Everybody's saying how Mexico is stealing jobs now from China and replacing China as an exporter of certain goods to the US. And I think it's the bright spots. Chile is also certainly a bright spot in Latin America. The potential of these countries is great as long as, again, the policies of the government support the creation of new businesses, the creation of new companies, and their evolution. And finally, for the US, I think that the US has now the potential to continue its recovery and even to accelerate its recovery. And we know that the US is not going to return back to its potential before 2015 or maybe even after 2015, but the speed at which it returns can certainly accelerate.
What's your big worry for the coming year?
The big worry is still, I think, that European crisis. We have 27 countries that have to agree on certain issues like the budget for the next 6 years or so. And working out this agreement and making what is best for the continent, for Europe in general, is difficult. It's, again, when you look back, it's very sad to say this, but it seems that very often politicians have their agendas that are not necessarily consistent with what the social welfare of the country requires. And we hope that, their mindset changes.
There are a couple of hot spots today, the Middle East kind of heating up again, and that, of course, will have an impact on energy supplies, particularly oil. Any of this worry you?
In general, yes. In the short run, the spike in the price of oil can always have a negative effect on the economy. But I think that the economies have become more and more resilient towards these kind of shocks, and they have survived several of these shocks in the past few years. I think that actually, from a different perspective, it's not such a bad news to have oil prices at higher level because, again, oil prices above $120 a barrel or so are constrained on the economy on the one hand, but actually on the other hand, it's good news because as the Minister of Oil of Saudi Arabia said 4 years ago, at these prices, alternative source of energy become feasible. So you start building up
Solar,
substitution.
wind power.
Yeah, biofuels or all these green energy sources. And so that's not necessarily entirely bad news. Again, in the short run, we start worrying, the cost of energy is higher. But when you look over the next 10, 20 years again, actually it might be accelerating the process of convergence or conversion towards.
What would you do to fix the economy?
That's a loaded question. Which one?
Okay, well, just the European economy. What would you do to fix it?
First, there must be a wall that says of several $1 trillion that says interest rates, yields on government bonds in countries that are doing the right thing are not going to increase above a certain level. The European Central Bank can create this firewall. They have started with this outright monetary transactions program, one part of it, but they can make it even bigger. Because if you look now at countries like Italy or Greece or Portugal or Spain, the thing that increases their debt is not so much that they're spending more. In fact, Italy has a primary surplus. They have more revenues than spending. But because the yield, the interest rate at which they issue new bonds is much higher than the growth rate of the economy, their debt continuously increases. The second thing is that we have to look at these countries and ask ourselves the question, what can these countries produce? How competitive can they be? What are the industries that are good? What are the industries where the business environment is right or wrong? Greece, for example, until last year was one of the countries in the world with the worst environment for doing business. They were ranked at 109th in the doing business indicators.
Kind of like 140 or something. It was,
they're 180, but according to the World Bank, it's easier to do business in Zambia, in Yemen, than in Greece. And that's very surprising. I know it's very surprising to many people, but if you ask Greek people who are, or foreigners, actually don't ask Greek people, ask foreigners who try to open businesses in Greece, the red tape, the bureaucracy is so big that it stifles any attempt for business creation. And this is the important question, because asking the question, is Greece better off in the Eurozone or outside of the Eurozone, I think is the wrong question. Even outside of the Eurozone, if the conditions for business creation are not there, then Greece can have their new drachma continuously depreciating and still not producing or exporting anything.
what would you then fix in the U.S.?
I think that in the U.S., on the fiscal side, it's very clear. To me, the number one thing, before we start discussing should we tax the rich or not, we have to fix the tax code. This is something that, of course, it's not novel. It's not that I'm the first one who proposes this. The bipartisan committee proposed the same thing. Many economists before that have said that these tax expenditures, the itemized deductions, these systems of exemptions and so on, creates basically a black box out of the tax code. Everybody who has tried to file tax return in the US knows that it's a nightmare if you try to do it by yourself.
So you're pushing for an alternative minimum tax?
No, it's not the alternative minimum tax. It's basically saying, let's have clarity. If tomorrow we say that we increase the tax rate on the richest to 39%, 42%, 45%, whatever it is, if there are a lot of loopholes inside, a lot of possibilities for exemptions and deductions, we really don't know how much more they will be paying, because you can find yet another deduction that you can add on this. And Singapore is a very simple example. In Singapore, the tax rate is very simple. The tax rate schedule is very simple, from 0 to 20%. Right? There are no deductions. If Warren Buffett is saying that he's paying a lower average tax than his assistant, then it tells you that as you get higher and higher, you get more tax deductions, so you can find more loopholes. And a simple tax system can avoid this. Then you can say, you know what, you have no tax deductions, but there is no such tax as 39% or 40%. The tax is 20 or 22% or 25%, let's say, for a larger country like the US. Simple, easy to understand, and from this point onward, we can start discussing how progressive should it be. From 0 to 20, from 0 to 25, where do you have the brackets? And then this discussion is meaningful. Right now, it isn't. And the tax expenditures have been calculated to basically amount to more than $1 trillion. So it's, I think that's the first thing.
Let me end by asking you what business schools like INSEAD can do to improve the situation. What kind of students should we be turning out in order to deal with some of these challenges you've just described?
I'll start with something very simple, and it's that for the growth of the economy, of any economy, the thing that you need companies, you need business. There is no other way to create growth than to have people organizing themselves or being organized in a process of production. There is just no other way. The alternative is to have a primitive society. Each one of us has a couple of cows, some chickens, and a garden. And then each one of us raises them and eats whatever we have back there. If you want to move beyond the primitive society, you have to have this organization of production, which is basically to have business. So teaching our students to create businesses, to be innovative, to be productive, to think about efficiency, is, I think, one of the best things we can do. And I agree with many people who say, but you have to teach them to take into account not only of the immediate need to create success in the company, but also to think about the stakeholders. In economic language, we say, think about the externalities of your actions. So don't don't just look at the cost of production and the revenue that you generate, but think about other costs and so on. And you can try to internalize them, and you can try to think how to be creative in that dimension as well. But I mean, I think that still the big point is that, you know, creating people that can manage companies, that can manage these processes, that can organize better, is, I think, the best thing that the business school can do.
Ilian Mihov, thank you very much for being with us on INSEAD Knowledge.
Thank you.